Hey everybody, it's Pete. Welcome to a new episode of today's Best Stock Picks. Thank you so much for joining me today. Well, we're going to talk about the SPY ETF, which has basically been drifting, melting, whatever you want to call it, bouncing around like a balloon every day for the last 2 weeks, basically. Yesterday morning, ironically, we'll take a look at the chart. It was kind of interesting where it came within 1 cent of the all-time highs, got absolutely shellacked for about an hour, and then slowly melted back up, touched the all-time highs, broke it by a penny, and now here we are. So how significant is that? Really not. There's not a lot of volume being traded right now. It's really the stimulus package that is punching the market higher, and the much better opportunities are being super stock specific right now because the indices with such lighter volume, there's no commitments being made there. And obviously you have more conviction. The charts are one thing, but if nobody's trading, that's another thing. So you can, if there's no selling, but we keep drifting higher, it appears that everything is great. But kind of like, actually, I was speaking to a trader yesterday, Jeffrey, who trades the futures. He said, you kind of look at your dashboard with all the market internals and whatnot, and you're like, there's something wrong with this car. It's kind of like driving on fumes. And actually, Chris said the same thing in our community about a week and a half ago. So what do we do? What are we looking at right now? Well, we have to really drop down and start to look at stocks that are performing well with volume behind them that are following through. The challenge that I'm seeing right now, and especially with some traders in the boot camp that are swing trading, is they're entering too late. They're entering after the stock has already moved what it normally moves. They're entering after the stock moves 80% of what it normally moves, and the timing is off. They're putting on trades, and then they're messaging me. Every time I put a swing trade on, I find that it's a losing trade. It's poor ideas or poor entries. So again, there's more to it than just being able to look at the chart and say, I want to buy that stock, and maybe it was up yesterday, but was it up 7 days in a row prior to that? That's what, like, that. We talk about that extra level. Like, there's one level of analysis, there's one level of reading it, and then there's that extra level that, you know, kind of like when you get in the car, you put on your buckle, and like there's more to it than just getting behind the steering wheel. And trading is the same way. You have to look to the left and build that argument. That's why we talk about tape reading, is building the argument. I want to be long. I want to buy that stock because it was up yesterday. That's a tiny argument. That's like one tiny piece of the argument. You have to assess probability of following through. You have to assess, what has it done the last week? What has it done the last month, the last 2 months? And then on top of that, what's the reward potential and how much do I have to risk for that? So today we're going to stick to ideas that have room to go, ideas that have punched through levels that have just started moving. And those are the better ideas right now because you have to be sector and industry specific to find some good ones. So we're going to hop on over to the charts and set up some trades. So I'll just give you, this kind of funny looking chart in the SPY. So you can imagine what day traders went through yesterday, and specifically people trading this. We came within a penny of the all-time high here, got, as I said before, shellacked, bounced back, and then we actually took it out by a penny. So we came within a penny and then took it out by a penny. And it looks like we're going to open up higher, probably right at or near that level, probably punch through it again this morning, who knows. But look, I want to tell you flat out, the number really doesn't make a difference at this point. The Fed stimulus package is what's holding the market right now. It's not anything else. There's no other way to put it. There's a $2 trillion bid under the market right now, and you can't fight the Fed. It's certainly not during this pandemic and since March when they decided to make decisions. And here we are. I'm not saying it's good. I'm not saying it's bad, but I will say this. Just be aware and pay attention to headlines when they finally say we're not doing it again. What if you don't believe what I'm saying right now, that's a Fed bid under the market pushing us from March to now, and that you're a genius? Pay attention and mark the date down when they announce that if and when they're not going to put another stimulus package together. Watch what the market does if you doubt what I'm saying, which is all the more reason to really be on top of your game and remove that thought process that the market always comes back. Right now, it's always coming back in this super short window because of that $2 trillion stimulus package. So I'm telling you, think like a professional and always be looking to manage your risk. So to start out, somebody in our group a couple of weeks ago, maybe about 10 days ago, called that group on. Stella called this out when the stock gapped up. And it's been in the list, but we said not yet. We consolidated for basically a week, and now it took off for the first day again. The problem with the stock is that it gets attention and then disappears, gets attention and then disappears. This would be a little bit more of a swing trade stock. I know it had a huge green candle yesterday and one about 7, 8 days ago. but it's more of a stock that you'd be looking at to start slowly building a position, looking for it to bounce, but definitely one that should be in the watch list right now. C Limited actually exploded on Monday. Tuesday followed through with earnings and kind of settled in, and we're at or near that breakout level. As long as the stock is above 145, which right now it's right, it's actually bid a bit higher than that, around 147. As long as it's above the 145 breakout, 146 at the very least, I still like the stock long. Zoom is one that I've actually been staying away from. I just tend to stay away from stocks that are in the news as much as they are, and especially with cybersecurity issues. For those of you that don't know, it actually got halted, which again, if you haven't seen the downside of a halt where a stock might be $270 right now and they halt it, and then after the halt, the stock opens up at $200, it's painful. It's really painful. Now, again, you can make the argument that could happen to any stock. Yeah, sure it can, but the stock now has a history, a recent history of data breaches. So I'm using it right now. I'm not going to say there's anything wrong. I'm not even talking about the company. I love the service. I'm talking about trading and risk management. So here's a good question. Here's what we're talking about now. And this is where I think a lot of traders are getting frustrated with their entries and feeling like they're doing something wrong. And quite honestly, you're buying too late. The stock actually approached all-time highs here, pulled back for 4 days, and gave us an absolutely phenomenal entry signal right here. The most simple entry that you could ever have. I talk about this every week in our coaching program, every single day in the room. The stock then rallies $50 and is kissing all-time highs. So you just missed a $50 rally in an incredibly simple setup, simple entry signal. And now the stock is kissing all-time highs. And generally speaking, you'd be looking to bid all-time highs. But is this the time to put on a new swing trade? Am I going to be day trading the stock long today? Maybe. Is it a day trade situation? Yes, because the stock is strong at or near all-time highs. Would I be initiating a new swing trade on a breakout here? Hell no. The stock just rallied $50. I'm buying late. I missed the entry that had massive opportunity and tiny risk relative to the stock. Still like the stock long. I want to see it get above this level, pause for a few days, and then look to possibly be long the stock. So that's a lesson there as well. CVNA. CVNA is the stock that I like the most coming into this week. It's still taking its sweet time to come back with some volatility. I like the stock. I like the stock long. Anytime you get massive volatility into a contraction, those are great setups. And we have a good one here. W as well, looking at all-time highs. But look at the difference between this trade and W. We're not buying after this and then the stock goes sideways for 5 days, which, by the way, that's what we're looking to see happen in Zoom. We're buying as soon as the first time it's breaking out. So this has a little different upside potential for a new swing trade. So keep an eye on that one. Penn continues to be in our list, continues to make all-time highs. Gave us a 3-day pause after a gap. Still like the stock long, no reason not to. Zillow, one of those slow-moving stocks that finally punched through again. So again, looking to the left, and actually had this discussion back and forth with a healthy discussion back and forth with Rachel yesterday in our community, choosing the right stocks and when you get involved with them. And I believe we were talking about Lennar, but this kind of fits the criteria as well. The stock is making new highs. It kind of moves really. Do you want to tie up capital in a stock that doesn't move that frequently, where it goes into a trading range for 6 weeks? Yeah, I know it's at all-time highs here. Is it matching the criteria? Yes, the stock is active. It's well bid now 3 days in a row and poking through. Absolutely a trade, not a new swing trade for me today. Maybe I would look for it to pause, pull back. Again, it's not, it's how I want to word this. Entries in this case, especially for swing trades, are the part that I think a lot of traders need to be working on. It's not finding ideas, whether it's a message here I get on YouTube or whether it's an email or somebody in the community. Finding trades is not the problem. It's setting up trades that have the probability of making money for the amount you have to risk. It's risk reward that's the problem. So Dennis also asked us a few times, what do you mean that you like it better over that level? And that essentially means that if I like it past the level, that the reward potential up to obvious resistance for the amount that you have to risk, it might not be the right formula. For like, I don't want to risk $3 to make $3. I like it better over a level or before it starts to take off, because then if I accept risk, the reward is there. But if I'm taking a trade where I could make $3 and risk $3, it doesn't make sense. So in this case here, the stock's at or near all-time highs. It's already moved $10, which is a pretty decent move for this particular stock. I like it long. I want to see it pause. Maybe it'll go up one more day, which it probably will today. Probably go up one more day. Maybe get another signal, maybe pull back, and then look for the next $10 move in this stock. Amazon actually finally broke out of this box yesterday, had a green day where it basically closed on the highs, opened near the lows, closed on the highs. We actually had somebody wanting to short it yesterday. Just a FYI, you don't short stocks at all-time highs. It's just, it's a trade that you will lose 9 out of 10 times, but you only remember the one time it worked. It's not a high probability trade. Stick to the order flows, trade with the smart money, piggyback with them. You can make the argument that you're only looking to do it for a 5 or a 10-minute trade. I'm sorry, that's still not a good idea. It's not, unless your trend is the 15-minute chart or the 5-minute chart and you're trading on super micro timeframes and it happens to be going down in that 15-minute window, which I know for a lot of active traders, like, what are you talking about? It's still not a good idea. If it's at all-time highs, you should be looking for a spot to be a buyer. So anyway, we still like Amazon long. ICE is one that we've had in the list for a while and punches through. Now, again, this is the timing issue, right? How much does the stock normally move? Now, you can see it finally punched through this level. We like it as a swing trade, but the entry was the punch above this level, right? So what does the stock normally do? Here's the most recent move from 92 to 97, basically, $5. And the stock now, from this consolidation, has gone 99 to 104. So it's already gone what it normally does. So what are the odds of starting a new trade today versus getting involved on the breakout, or even possibly, Felipe actually asked this question in Monday's coaching call, do you get involved in a breakout just prior to resistance? I'm like, yeah, if you have a consolidation and a major level and it gets through there, that's probably the better trade to make. So again, I love this stock. It's a question of getting in the trade where you feel like there's still profit potential. I love it above this level. It's just a question of where. And the last two we're going to talk about are two that we talk about pretty much every day because they're tradable stocks. OSTK continues to follow through, and they had good news during the week. And W, we actually just discussed before. Maybe I think I've done, oh yeah, I've done my list twice. W actually breaking through as well today too. So there's some good stock-specific ideas out there. I'm getting some questions about why am I not looking at the popular stocks. Well, Apple right now is really the only one out, or Tesla, I would say too. You have Apple, Tesla, those kind of stocks. Facebook has kind of had a weird pandemic. It has these explosions and then does nothing for a week. It has to be in your list every day to get one of those explosions. But more often than not, it just hasn't set up well on the daily chart. Same thing with Microsoft. It's kind of in a box right now. We need to see it get over a certain level before we start to trade it again because there's really no edge. That's really, whether risk reward is one thing, but then not having an edge on top of that, you're really just trading one day's worth of price action. So some opportunities today, but we got to put on our overalls. It is the back half of August, which traditionally the volume dries up there as well. And I know right now the circumstances are different because everybody's home with the pandemic. But the reality is it is 2 weeks before Labor Day. So super stock specific, absolutely there's opportunities out there, but stay away from stuff that's trading on super light volume because it's very easy to get chopped around and lose your confidence. So let's have a great day. I'll speak to you soon.